Everyone, can you guys hear me? Can someone put a comment in the box or something just to let me know that I'm coming through okay? All right. Um, hey, welcome. I felt like it was really important to start on time because earlier today when I did the other one with Paul, I had a little bit of a delay. I had to use Zoom because I had a guest on, but for this one, it's just me. So the topic of this live chat is going to be all about how the COVID-19 virus, the effect on the economy is going to affect business buy sell right now. And so we're early, but this is the important key point. In a lot of different news articles I've seen, basically turning off all the retail, all the public facing businesses in most of the states and provinces across North America and what's happened in Western Europe as well with things shutting down over there. They may not have turned off 20% of the economy as far as dollars, but they probably put 20% of the workforce out of work. And even though there's going to be public supports for people, President Trump's talking about sending out a check. Here in Canada, EI is waiving its 7-day waiting time, and there's a special program for self-employed people that can't work. So they're going to try to help those people as much as possible. But let's be very clear. Someone who's just been laid off from the restaurant is not going to go and lease a new car. And the person who's been saving up a down payment to buy a house is now going to have to dip into those savings in order to cover their bills while they adjust. And while the guys who work construction right now are still busy working on things that started before, when the people decide not to buy a house, those construction guys are going to start feeling it in a couple months' time. So we have just started a recession. I don't know how bad it's going to be, but it's going to be significant and it's going to ripple through the economy. And the governments are going to try their best to help as much as they can, because of course the government, the politicians, the civil servants, et cetera, those people live off of tax dollars taken from the productive economy. And if the productive economy goes down, then there's less for them to tax, right? And so then, God forbid, they'll have to have cuts in the civil service. Anyway, so what is this going to do to people buying a business, people who are trying to buy a business right now, or people who are trying to sell? Basically, let's think about how loans are given out, how the underwriting process works. So if you went into a bank 2 weeks ago and you said, I'm trying to buy a business, the banker would want to see the last 2 years of financial statements. They would do their paperwork and they would make sure that the cash flow of the business was sufficient for you to make payments on the loan they were going to give you to buy that business. Okay. And banks will normally lend a certain amount of money against business. And in many countries, there are government programs that encourage the banks to do more through offering government guarantees, such as the SBA program in the United States, the Small Business Finance Program in Canada, and things like BDC, which is a bank owned by the government in Canada. And so those things cause even more leverage to be brought to the table when someone's buying a business. Now, when you buy a business, normally they look at the last 2 years, but before they fund the deal, they want to have an assurance that the business is actually carrying on in the way that was demonstrated by the last 2 years. And so right now, there are all kinds of businesses now who've broken that chain of performance. And so the banker is going to look at the results from a restaurant whose dining room has just been closed by public health authorities and say, this business today is materially different from the business represented in these financial statements. And so that loan is not going to be approved because the banker can't be certain that the money is going to be repaid. The other thing to keep in mind is that in organizations like the SBA, I can remember years ago, you had to have a bigger and bigger down payment than you did just recently. In fact, it was only about 2.5 years ago, if memory serves, that they actually increased their 7A program to do 90% financing. Back in the last big downturn in 2008, 2009, I was attending IBBA conferences where I would meet a lot of American business brokers, and some of them complained about the difficulty of getting an SBA loan at that time because the requirements were much more strenuous in that downturn because, of course, nobody wants to make a bad loan when they can avoid it, right? And the government doesn't want to guarantee a loan that's going to go bad if they can avoid it. And so I believe that the focus for the last couple of years at the SBA has been on helping baby boomers retire. And they've been supplying finance to make it easier for sellers to sell and get a higher price for their business. Their focus over there, wherever their office is, has just completely changed in the last week. Their focus is now going to be on helping to give smaller operating loans to businesses to help them survive the adjustment of this economic catastrophe. So instead of focusing on someone's acquisition loan, those guys are going to be focused on making a loan to help a business person cover a couple months of expenses to try and get their business to recover and get through to the other side. So the focus is going to be very different. And even though government officials and politicians are talking about how they're pressing these government agencies to make more money available, I want to tie it back into the first point that I made. The focus is going to be on having the economy survive, not on helping people retire or on helping people buy a business. Because quite frankly, the government doesn't care if a business changes hands. They just want it to function so they can tax it. Okay. So they're now in the life preserver business instead of in the, helping people acquire and divest of businesses. So the focus is changing over there. So there are exceptions, of course. I just spoke this morning with a fellow who's looking at a pizzeria and is simply a takeout counter. And since all of their competitors basically have had to close in town, their business is up. And so that business, you may still be able to buy that business. You may still be able to get some financing. I think the 90% SBA program is about to change. I think that the amount that they're going to finance is going to go down and the down payment requirements are going to go up. And if you are a buyer of a business, that is great news. Because what this is going to signify is that the leverage that's been driving prices up is now being removed from the market. And so you can get in at a more reasonable price, on deals that make sense. I've coached many people who made offers on businesses that were good, sensible offers, only to be outbid by someone who didn't really know what they were doing, who could get a bigger loan and was willing to pay more. I feel for those people today, because now they're sitting in businesses that at this moment in time are way over leveraged. They're going to have a hard time making those payments. They're probably going to get some kind of payment holiday. That's what BDC has announced here in Canada, is that they're going to give people several months of simply no payments. But those debts are simply deferred. And at some point, they're going to have to start collecting again. And if it takes us a long time to recover from this recessionary event, it's still going to mean problems for businesses. Now, so the amount of leverage is going to be going down from banks, but that doesn't mean all of the deals are not going to be doable. What is increasingly going to be happening is that sellers who don't need to sell are going to see how difficult it is to sell. They're going to see that it's going to be difficult for buyers to buy, and that their financial statements for 2020 at least are not going to support the kind of money they want to get for their business. So the people who are not truly motivated to sell their businesses right now are probably going to leave the market. They're going to back away and they're going to remove their businesses from sale. And they're going to put an effort into trying to repair those businesses and make them more appealing. Back in 2008, 2009, 2010, when I was working with people and I would show them what their business would likely sell for, I would see in their historical financials that 3 years earlier, they were doing 20% more in sales and like maybe 50% more in profit. And they would say, well, no, I don't want to sell now then. I want a chance to recover. And a lot of those people ended up spending another 5 or 6 years in their business. Some people are not in the position to be able to do that. Top reasons why businesses go up for sale. If you do my program, Business Buyer Advantage, you'll learn the top reasons why businesses go for sale. They're generally personal motivations, and retirement is one of the least motivating factors. Usually it's because people hit a certain goalpost age. They hit 65 or 60 or 70 or what have you, and they feel that they should retire. Doesn't necessarily mean they have to. If they're being motivated by some kind of family thing, divorce, poor health, the need to relocate, one of those kinds of things, then they're going to still have to try to find someone to buy their business. And what that means, if there isn't as much bank leverage available, is that you're going to have to go back to what I'm referring to as 2008 deal making. Because when I had my office open through that period, when things were in recession and it was hard to get bank lending, I did lots of deals. In fact, in 1 year, I think I did a dozen deals with no banks involved at all. That doesn't mean people didn't get personal leverage. So personal lines of credit, borrowing against their own homes, using their own credit cards, things like that. And so that's what we're going back to. It's going to become much easier to do a deal with a larger degree of seller financing, and sellers are going to have to agree to that if they're going to want to get a reasonable price for their business. And so lately, in the last year, I've seen a lot of deals where sellers have gotten 90, 95%, 100% of the purchase price on closing. That seller's got no motivation to stick around and help train, to give coaching, guidance, advice, etc., to a buyer. But when a seller sells his business and carries 50 or 40 or 60% of the deal in paper, they have a vested interest in making sure that buyer is successful. And so it aligns the interests of the buyer and seller together so that the buyer is going to get the support they need and the guidance and the coaching from the person who knows the business the most to actually make it successful. And I know that sellers want to get the most that they can for their business. I understand that. More and more in this kind of environment, if you need to sell today, then a good portion of the goodwill component of the business sale price is going to have to come from some sort of future performance. Excuse me. It's not COVID. I'm getting over a cold. Anyway, so the what I want to get into here is that the marketplace is going to be changing quite a bit. And I think it's going to be changing in a lot of parallel ways to what I experienced when I was in this as a broker back in 2008 to 2010 into 11. To 11, it started to recover. So I think you're going to see businesses disappear from the marketplace. Marginal businesses that were having a hard time being successful, where the sellers were looking to sell the business as a way to exit, a lot of those things are going to end up just going out of business. So if you have the stomach and the fortitude to basically start a failed business by buying its assets and reopening and maybe changing it in some way, opening a pizza parlor in a place that's always been a pizza parlor, there's a certain amount of locational goodwill there, then there could be opportunities coming up for you. I never recommend that. I recommend people buy a business that has an established track record of profitability. The people who don't have to sell, they're going to withdraw their business from the market. The people who still have a pressing personal need, they're going to need to try to do a deal, and the terms are going to be more favorable for the buyers. When it comes to tying the purchase price to future performance, there are a couple of different ways that people do this. You'll often hear the term earnout. An earnout is an unspecified amount of money. So the way that you might buy a business with an earnout is you make a certain offer, kind of like a down payment, with your money, maybe the bank's money, for the value of the equipment, machinery, inventory, for example. And then you tell the seller that under certain circumstances, you're going to give them some other amount of money over the course of time should the business recover. And there's a bunch of different ways that we do that. Back in November, there were a lot of indications that a recession was on the way. And I thought it was just going to evolve naturally. I thought that the amount of debt in the markets was going to cause something to happen. Then I thought the Max 7, Max 8 Boeing thing was actually going to create the recession. Boeing's been, I think, spent $15 billion over the last couple of years borrowing money to buy back its own stock. So it's been making its own balance sheet weaker. And now they're in trouble because all of their customers are going to have trouble. All the airlines are going under. I thought that the Boeing thing could be a trigger that would cause this decline. But I thought it was going to be a gradual decline. I would never have foreseen something as drastic and as sharp as this. So in those recession modules back in November that I added into Business Buyer Advantage, I actually give examples and worksheets of different ways that you can formulate things. So there's different clauses that you can put into a promissory note that will give you relief if things don't work out properly. So, what do I mean by that? Well, right now, we have a lot of businesses that have been forced to close by government mandate. So clearly, they're not doing any sales. Barbershops, bowling alleys, cinemas, this kind of thing. When the time comes that the virus is under control, those businesses are going to be allowed to reopen. However, the people who patronize those businesses may not have the money to go and visit those places because they've been taking employment benefits or some other kind of reduced amount of income and trying to cover their bills with it, even with payment holidays being offered on car payments and mortgages and stuff like that. So when the businesses reopen, the recovery is not necessarily guaranteed and it's not going to be instant. It could take a while for things to build up. So you could buy a business and you could buy a business which reopens, starts to perform, and then because of everything else going on in the economy, it could then, not really grow. It could take a while. It could stay low. And so if you bought that business and part of the deal was for a seller note and you owed the seller some more money, you might want some clauses in there that would talk about when those payments would start, maybe at a certain sales level, maybe, some other key performance indicators would be hit. And so there's a bunch of that stuff in those recession modules. And if you took Business Buyer Advantage at any time in the past, just log in. It's all there for anyone. That stuff is available for lifetime. I got a great question that just popped up it's Joe. He says, David, how can we negotiate with the building property manager who is demanding rent? Well, here's the thing. The building property manager knows that people aren't out shopping. And they know that they're not going to be able to make a payment to their mortgage or to their investors if they don't collect rent. And they can either close you down, kick you out, change your locks, or they can work with you. But if we're going into a recession, the last thing I would want to have as a building manager is empty spots in my commercial property. In fact, just this past summer, I had a friend whose business wasn't going well at all, and he decided to close it. And he called the building manager, and he said he was going to move, and he didn't have any money, and he was sorry that he had to break the lease, but it was either that or simply not pay them. And you know what they said? They said, we'd rather you stay open and not pay us because it's easier to rent a location that's active than one that's empty, which surprised me, right? And this is the thing, you just never know. You have to open a dialogue with people, and you have to talk to them. And as a business, in the last live stream that I did, we talked more about this when I had Paul on, and we talked about, renegotiating expenses and stuff like that. But this stuff is going to become important as a buyer when you're doing your due diligence. When we do get beyond this crisis point and you're analyzing what financial statements are available for a business, you're going to have to start asking questions like, what is the rent, and why doesn't the rent that you're showing for 2020 equal 12 times this monthly amount? Because perhaps their landlord did give them a break, right? And so it's going to be important for you to understand what they went through. And if we find a business that still manages to be successful or manages to survive through this downturn, it can mean it's a good business. But here's the other really critical thing that you have to look at. A business that exists today that's been running for a while, that's been profitable, they will not have the same amount of leverage as someone who is a new owner. So if you've got two different restaurants who have both been forced to close, one's been around for 20 years, really doesn't have much in the way of debts, the owners have money, they can just close the doors, lay off the staff, wait for things to recover, and they can probably pay their rent while they're doing it. The next door business is a similar restaurant, and it was bought in October. That guy's got a loan for a high amount of the purchase price of the business. In a lot of the times, he's committed 50% or more of the free cash flow to making that loan payment, and now all of that's gone. Even if the lender gives him 6 months where he doesn't have to pay, you can be certain that interest is accruing. And when the payment holiday stops, they're going to want one of two things. They're either going to want a higher payment, or they're going to want to extend the term of the loan. They're going to want to make some kind of adjustment. But a highly leveraged business is much less likely to be able to survive this downturn than one that has its debts under control and a higher amount of equity. And so you want to look for those businesses that are doing well, that have survived, but you have to keep in mind that if the debt wasn't structured in a way that gave a buyer options, and this, again, this is in Business Buyer Advantage in the recession module, before you get into the bad times, you want to create options within the seller note that give you circumstances where you control how you can change the cash flow. So I give examples in there about, saying things like, if sales in any month dip below a certain level, the buyer has the option of interest-only payment. And that allows the buyer to save that principal amount. Okay. I have a question that was emailed into me earlier today. I'm going to address that, and then I'm going to get into some of these great questions that are popping up in the live chat. So Tomo over in Europe sent me a question, and maybe he's still up. I don't know. It's Friday night. I'm sure he is, and he's got nowhere to go, right? So he says, my question or dilemma is, how will we value a business in 2021? So fast forward 1 year, and we're in 2021. Oh, there's Tomo right there. So we're in 2021, and we look back. What are we going to do when we have these 2020 financial statements, which are probably a lot worse than 19 and 18, right? And so again, if you go to a bank, they're going to look at the past performance, and if they see the 2020 numbers suck, they're going to discount the earlier years. They're going to say, this is now the status of this business. And any valuation is going to have to be based on the 2020 performance. Now, some businesses, like I said, like I mentioned, that pizzeria takeout counter, they're doing better right now. Some businesses aren't going to be affected by this. Some businesses by, this fall could be doing the same kinds of numbers that they did in the fall of 2019. So it is conceivable that you could go in and show a month over month, monthly performance, and show someone that, yes, the business has recovered back to the 2019 performance levels. Maybe. A lot of the times, even if you can be very convincing, the people at the bank have to follow certain conventions and rules. So I would actually take it another year further. So in 2022, if you're going to buy a business and the 18 and the 19 numbers, let's say it did $1 million in sales, and then in 2020, the business sales fell to 400 grand or something catastrophic. And then in 2021, they were back up to $1 million. I think in the year 2022, you could make a very cogent, logical argument to someone that the 2020 year was abnormal. And if I was evaluating a business, I would actually, if the performance of 2021 was the same as 18 and 19, I wouldn't put any weight on 2020. I would say this is a business that's gotten back to normal. So as you can see, we're starting to talk now about moving several years into the future before we can probably rely on the kind of bank leverage to do deals that we've been accustomed to for the last little while. And that is going to be the challenge and the opportunity. Because people who, if you have a good, profitable private business and you're making good money, it doesn't make sense to sell. The multiples are just not high enough. Nobody gets out of a small and medium-sized enterprise to cash out. People get out because they need to, or they want to because of retirement. And so those people who need to sell, they're still going to need to sell, even if the economy is not doing well. And the only way they're going to get a price that they want is by creating terms that allow them to share in the risk you're taking as a buyer. And so that's a positive thing in my mind for buyers. Let's take a look here. I got a bunch of hellos and yeses, and I see Etienne and Baha and Barat and Joe. Etienne says, many business owners will choose not to reopen. This will create opportunities to acquire their goodwill or clientele. Yeah, essentially that is an opportunity where somebody decides to close the business and you can go in and open it up. A lot of the times, if it's a retail type business, I call that location goodwill. If everyone's always known that there's a ice cream shop on that corner and they close and you go and open an ice cream shop, you're going to get traffic just because people are used to going there, right? And they may arrive and go, oh, it's got a new name or something. So those are opportunities, definitely. Um, Robert, thanks for the kind words. And Molly, sorry, man, I can't read that. Anyway, so I want to give, um, and someone said, I've just learned that not all sellers went to that business school. So here's the thing is that if you were negotiating the purchase of a business before and you had a price fixed and you had terms and the buyer was expecting you were going to go and get a loan, and then this past week, all of that changed, they're going to be in denial because they need to go through a mourning period, like quite literally a mourning period. When I was going through my separation and divorce, I went to a counselor who told me that I needed to take time to mourn the loss of my lifestyle, right? The fact that I would, wake up on Saturday mornings and my wife would be there and the kids would be there and we would make pancakes together. And then here I was every second Saturday with no kids. And then the other Saturdays, she wasn't there. And so there was a pattern, there was something I was used to that was suddenly taken away. And so the same thing exists with the deal, because if you negotiated a deal, 2 months ago and then went to the banks to look for financing, the people who are on the selling side of that, they now are dreaming about what that deal means to them. And so the price, the amount of money they're going to get in closing, they're making plans in their head about how they're going to spend their summer, the places they're going to visit, right? It's a good thing they didn't sell earlier and get on a cruise ship. They could be wandering around the Pacific with nowhere to go. Now they're being told, no, you're not getting that. It's not, the business isn't the same, or we will agree that it's worth that amount, but the terms have to change dramatically because now the bank won't lend us money. They're going to respond with anger and they're not going to be happy. And they actually need to go through a process of mourning. It's going to take them a little while, but eventually they're going to see what's going on around them. And the problem is in the sort of the self-motivation. Empathy is the solution. And so a lot of the times when I perceive a lack of empathy, the way we get around that is through asking the question, how? So, in one case I'm thinking of, you give the people a little bit of time and you keep in touch with them. You say, look, we're still interested. But what we can't figure out is how we're going to be able to do a deal like this under the price we negotiated, under terms that you want, when we can't get money from the bank. We can't prove to the bank the cash flow is there. We don't know if we're going to be able to make the loan payments. And so we can't risk our down payment money. How are we supposed to get into this kind of deal with all of these uncertainties? And that's the kind of question that is going to make someone, maybe in their own time and reflection, start to have a little bit of empathy for your position. And that's why I've often said that buying a business it's not a confrontational process like sometimes car sales or real estate is, because nobody has any investment in the relationship after the deal is done. But in buying a business, it is a highly collaborative process. The two parties are working together to get the deal done, because ideally both parties have an interest in the business being successful afterwards. All right, let's get back into here because you guys all of a sudden spoke up and said a bunch of things. What kind of price decline would you see in the sale prices compared to last year? It depends on the terms, because if somebody wants all cash for their business, right now, if their business is closed or if they serve the public in any way, and people who might be working in the service industry could be amongst their clientele, we have no way of knowing how the rest of the year is going to shape up for them. So in my mind, the business doesn't have any goodwill. It's unproven, which brings us to the value of equipment and inventory. If I'm going to buy something today without knowing how well the business works in this new world that we have, with with the coronavirus, then what am I willing to extend? What am I willing to do? I'm willing to buy stuff that if it doesn't work out, I can sell, right? And so if that person wants all cash, the cash price suddenly has gone down, in my mind, in a lot of cases, to asset value. If they're willing to accept terms, then I might be willing to say, look, here's what I'm willing to do. I'm willing to offer you a reasonable price based on last year, but you have to finance a good chunk of it. And I'm not going to start making payments until my sales hit this amount. Or if my sales don't hit this amount by the end of 2021, then I'll start making payments, but we have to discount that note. Effectively, I'm going to get a lower price for the business after it's proven that the business has not recovered. And so again, we're tying things to the future performance as much as we can, because especially today on March the 20th, we're a week into general closures of all public businesses in a lot of states and provinces. We have no idea how long this is going to go for, and we have no idea how many people are going to be able to go out and spend money afterwards. We've all seen the stats on how average people don't have a lot in savings. Average people have a lot of debts. People who do have savings are going to be dipping into them. When people get back to normal, as normal as it can be, the people who save money are going to want to save up again. They're not going to feel comfortable going on a spending spree. If they're used to having a $10,000 emergency fund, they're going to say, wow, was I ever smart to have that money? They're going to want to reaccumulate that money. And the people who, got into more debt over the period of the store closures, they're going to want to address that. They're going to say, I can't afford to go out and go to the movies because I, went another $2,500 further into debt over the last 6 weeks. Right. So the people on TV, the economists, the central bankers, those types of people, they like to believe that the economy is this machine and like a locomotive engine, and that the engineer can turn dials and get a different performance result out of the machine. So they think that they can turn interest rates down and that will cause a bunch of people to go and spend money. I don't subscribe to those beliefs. If you study economics, that's called Keynesianism. And the idea is that the government has a role in the economy where they can adjust things in order to control the ebb and flow of things. I think it's hogwash. I believe in a different sort of economic thought. It's called the Austrian school, which there's a famous economist, Ludwig von Mises, who basically said the economy is not a machine. All you can do is observe the economy in aggregate, because the economy is simply the sum of millions of individuals making decisions on their own behalf. And every one of those people is motivated by some other different thing in their own life, right? And so if you are selling a certain item and somebody, televisions, for example, and somebody's been wanting a new TV to go with their new PlayStation, maybe they were saving money for that. They felt confident that they could put that money down for the new television. After this event, even if they go back to work and people aren't out as much and their hours are not the same as they were and their tips aren't as good as they were, then maybe they're not confident in buying that TV and they put it off. And this is how a recession, sort of goes down before it starts to head back up. Something changes in the attitude of the people to make them more confident in spending money. And sometimes it's things that they do on their own, like the saver. He finally gets his savings account back up to $10,000, and now he feels confident to go out on a Friday night. For other people, it's the fact that maybe a new business opens and they can get a better job that pays more. And now they feel confident buying that TV. So it's very complex. And like I said, the governments are trying to do things. They're trying to get it going because they don't want to deal with the repercussions of it not working. Because if the economy doesn't get going and they can't tax it, then they're going to have to either cut their own staff, civil servants, or they're going to have to cut programs, or they're going to have to go even further into debt. And the central banks are already monetizing public debt. And you can only do that so long before you get inflation. And inflation hurts everyone. So this is not an economics channel, but these are the things that I think about. Everyone still is going to need to buy certain things. And this is why I say that everyone needs to go out and do things and get things, and people buy things to satisfy emotional needs. And so that is why somebody who might normally take a vacation down south, who suddenly can't because of the recession, might still go and buy a dozen cupcakes from a bakery, because they still want to do something to make them feel better. They've got some kind of emotional need that they want to fill. And if they can't fill that need by doing something extravagant, they're going to fill it in some other way. And so there's always room in the economy for satisfying people's desires and their wants and their needs. Let me tell you a quick story. When I was 14 years old, I spent my summer riding a three-wheeled ice cream bike, Ice Cream Novelties. It was a company called Dickie D. They were all across Canada. And I was 6 feet tall at 14 years old. So I was big and strong and able to pedal that thing. My mom used to pack me a lunch with 2 submarine sandwiches because I burned a lot of calories. And what I noticed is that I used to go through this fairly nice neighborhood with nice homes, and I wouldn't sell any ice cream. And then I'd go to the trailer park and get swamped by children who had, who had $1 coins. The loonie was just new back then. So these little kids would run out with these $1 coins, and I would sell a ton in the trailer park. And then I'd go to the fancy neighborhood and I wouldn't sell anything. And I finally came back to the shop one night and I said to the manager of the business, I said, Mike, I can't understand why the people without much money are buying all the ice cream and I can't sell any of the people that have money. And he used to do it 20 years earlier. And he said, look, it's very simple. When people who don't have a lot of money want a treat, they spend $1 on ice cream. When people have a lot of money and want a treat, they go on vacation or they buy a TV. And it made perfect sense. And so what it means is that there's room in the economy for everyone who's trying to satisfy every need. The person without a lot of money would certainly have more if they didn't buy ice cream, but they had an emotional need that they wanted to fill. And it was really easy to give their kid that coin and send them out the door to come and buy something from me. Justin, if a business is about to go under, how would you approach seller to get in touch with their employees to work with them to keep it going? If a business is about to go under and you think that you can save it somehow, the very best thing you can do is talk with the owner, because there could be a way to acquire the business and take care of the debt. The problem with a lot of businesses that are about to go under is that they have a bunch of debts. And so even if you offered to buy the business, the seller may not believe that he can sell. And so I've actually done an interview. It's recorded. It's going to be the weekly weekly movie. It's going to be my video on Wednesday this week coming. And it's about how to do an asset sale in the United States using a certain procedure that allows you to wipe away debts. And so you're going to find that very interesting. And I was really happy to have recorded that interview because I think that a lot of people are going to be in this kind of situation. David, I'm in the due diligence phase and wondering if I should run. It's a niche wood manufacturing business. So I think that definitely you should be looking at what the performance is and what the order book is and see how that's changing. And I would want to have an idea of how the business is going to be affected. And the big thing is that you can negotiate some kind of adjustment to the price if there's a seller's note. If there's no seller's note, if you're borrowing all the money to buy the business, then no matter what happens, you owe that money to the bank. Now, what I believe is that in the next short little while, between now and closing, you're probably going to hear from the bank, because I think that these changes in policy are going to be coming through rather quick. On the earlier call today, there was a gentleman who is in equipment leasing, and he put in the comment box that they're still doing equipment leasing and they're still funding those deals. So there are some people in the commercial lending area that are still moving strongly. Other people want those SBA guarantees or the other government's guarantees around the world in different programs because they don't know. But if the government's on the hook for it, sure, why not, right? But I heard from another broker by email today, a loan broker, that all of the commercial deals they're working on have suddenly slowed down. And to me, that's hesitation, because the people that have the money, the non-bank lending sector, non-bank finance companies, they get their money from issuing bonds or from private equity groups or, places like that. Those people are very smart and they know that there's a problem. And so they likely are telling them to slow down on these deals. So be in contact with your bank and be in contact with the seller and let them know that you need to know what the performance of the business is and you want to see how the order book for upcoming orders is changed, in the last few months. Because if they're not receiving any new orders, and this is something that would only be happening now this week, that the orders might not be coming through. It is March the 20th. I was supposed to go to Las Vegas April 30th to do a live session. It's probably not going to happen. I still have an airline ticket. Who knows if the airline will be flying? Right now there's a limitation on travel between Canada and the US. No leisure travel is allowed. So, I mean, would I even be able to cross the border? Who knows? So there could be people with POs in that business who haven't yet canceled them, but likely will. Just like my flight is likely going to be canceled. I currently own a business and considering buying another one in the future. Do you think 2021 would be a good time in terms of finding businesses that are still solid but is cheaper due to 2020? Yep, I do. There's no question that this event is creating a buyer's market. No question. Baha, I'm a physiotherapist, was planning to buy a clinic where I'm working. The last 2 weeks received the business valuation. I'm not sure how to proceed. Here's the thing. Physiotherapy is a health-related thing. And so people who are injured and who have insurance coverage, they're going to want to be well. And so they're probably going to keep going. So this could be an example of a business that may not be affected as badly by this thing as we think. Now, I've said a lot of words here in the last little while about how bad things are, but I want you to realize one thing. About half the people in the economy are retired or work for the government. They're going to get their checks. So there's still a huge market of people who are still going to make their car payment, still going to make their mortgage payment. They're still going to be okay. The problem is that if overall, if you have a business with $1 million in sales and you have a $100,000 profit, if you have a 10 or 15% decline in revenue, you could lose all the profit. Pricing and profits are made on the margin. It's that last edge. And so when the business's sales shrink, you can try to shrink the business by laying people off and things like that. But certain structural things can't be adjusted so quickly, like the rent, unless you get the support of the landlord. Like if they're willing to play ball with you and they're willing to give you some kind of concession. And that was the big thing that from this afternoon's live stream is you don't necessarily want to push off debt to pay it in the future. You want to work out some kind of deal to reduce expenses. You want to try to get to a profitable situation. Robert, I'm in on the Austrian school. All right. Hey, Alex, how you doing? Are brokers more active now? Is it worth building a relationship with new brokers? So you can get out and meet new brokers, but they might not be around for long. So in the last big downturn, 08, 09, the business brokerage industry shrank considerably. And Ed Pendarvis, the founder of Sunbelt Business Brokers, when I saw him in Atlanta, which I believe was the 2009 or the 2010 IBBA conference, I spoke with him for a little while, and he said to the group, he said, for you brokers that are Americans, he said, the one thing you have to remember is don't get too dependent on the SBA, because the SBA can change the rules and then all of a sudden you won't know how to do a deal. And I thought it was really great advice because in Canada, we don't have an SBA. So we had to piece together deals with down payments and equipment loans and seller notes to a good extent. So there's a lot of people out there right now who are calling themselves business brokers who are not going to know how to function in this new world. And the most important thing a business broker does in brokerage, as far as I'm concerned, is set the expectation of the seller. Mr. Seller, this is what a deal is going to look like. This is what you're going to get, and this is what you're going to have to do to make the deal happen. And so a lot of people are going to be leaving the profession because they won't be able to close deals, and they're going to begin to realize they can make more money doing something else. And so I expect to see shrinkage in the industry. And because when I first got into Sunbelt, they had over 300 offices, and I don't think they have that now. They went down, and then they started building up again. just as an indicator of how many people are out there. Thanks, Etienne. KC, currently have a deal under LOI. How should I proceed with raising capital? Will financing debt or equity be next to impossible? I don't think it'll be next to impossible. I just think it depends on what the money's for. So if you want to raise equity or debt to finance the building and some equipment, you may still be able to. Like I said, that leasing guy in the last call said that they were still funding deals. So if you're trying to raise, a little bit of equity to then leverage a 90% loan for the business's value, including goodwill, I do think it's going to be difficult. Just because people are going to be a couple things. It's a great can of worms. Number one, the people who have a lot of money, the investors, private equity groups, etc., they know that things are going bad. So a lot of them, their reaction is, whoa, let's pull back. Or some of them might be saying, instead of financing these kinds of deals, why don't we buy things in the stock market that just went on sale by 30%, right? And so there's now different opportunities. When things go down, opportunities often present themselves. So these guys are now have more to choose from. But the other thing is that there's another tier of investors, if you're going to go looking for private investment money, and they're high net worth individuals. So they might be people that are worth a couple $1 million. They're wealthy people. But guess what? Last week, their wealth shrank by 30% because they're highly exposed to things like the stock market. And so the people that potentially could have been your investors now may not want to because they don't feel that they can afford to do something risky. They felt, high on the hog last 2 weeks ago when their investments were worth more, or maybe earlier than that. I don't watch the stock market that much, but they felt high on the hog back when their stock market values were really high, and they felt like big wheels that they could do investments like this. And now that they've taken a kick in the shins, they're probably a little more shy, and so they don't want to get into it. So it will likely be more difficult. Mike, good stuff. Thanks, Dave. Thanks, Mike, for tuning in. Yeah, I really wanted to do this because I'm in my Business Buyer Adventure Group coaching program. We had a great call on Tuesday night. A bunch of the members came out, and there were a lot of questions about this COVID-19 thing. And some of the thoughts that I had Tuesday night have evolved in the 3 days since Tuesday, as the degree of change has grown. For example, on Tuesday, the government here where I live was saying that restaurant dining rooms had to close every second table to keep patrons apart. Yesterday, they declared a state of emergency, closing all dining rooms. Restaurants can only be takeout and delivery now. And so the degree and magnitude of change is increasing. And as it was growing yesterday, I thought, you know what? I need to address some of this stuff so that people can think about this. And as always, if you've got money, cash, you got resources, and you have expertise, it just takes an effort to find the deals. And it's not always through business brokers. So if any of you guys who are watching this haven't done Business Buyer Advantage, I highly recommend you do it, businessbuyeradvantage.com. And like I said, there's a new section that's been added in November about buying in a recession. All that stuff now is coming to play. And for those who want a little bit of extra help and some more time with me and to meet the other people who are working with me, the Business Buyer Adventure Group coaching program is awesome. There's a bunch of people in the group who've already bought businesses, and they've stayed in the group because they intend to do it again and they want to share with the other people. And so David's about to submit a letter of intent. Awesome. All right. Anyway, have a great weekend, guys, and enjoy it. I'm going to be sitting home watching TV like a lot of you, and stay safe. Wash your hands. Don't take any risks. The latest things I saw is about 38% of the hospitalized cases in the U.S. are people under 55. So if you're young and you feel invincible, don't. It really can affect you too. And there's been a bunch of news lately coming out of China that they now realize that they had a whole bunch of infected people who were asymptomatic, They didn't have any symptoms, but they were carrying and spreading the illness. And so it's dangerous. Follow the public health rules, and avoid contact as much as possible. And hopefully, in a few weeks, we can get this thing under wraps and start to rebuild things and get going again. All right. Have a good night, guys. Night, Tomo.